Well, welcome to part 4 of why the housing market will crash. All right, so our first chart up for the day, or for this video, is net visa arrivals from the ABS. And you can see the total net visas, very high, isn't it? In fact, the monthly ABS visa data shows that a net 294,000 international students arrived in Australia over the year to July, which drove the 503,000 increase in total net visa arrivals, excluding visitors, lifting total temporary student visas to 655,000 in July. And here, this clearly paints a picture of what type of immigration we're getting. Oh, network visa arrivals. Yep, that in blue. Yep, it's as high as it was, back 2012, probably a bit more. Net skilled visa arrivals. No, we had more prior to GFC and after GFC. What about net other visa arrivals? No, pretty small compared to before. Net New Zealand arrivals. No, pretty small. Net student visa arrivals in red. That's where all our immigration is coming from. And they are impacting the rental market. Now, what about houses? Well, students can buy real estate on their temporary visas. So they can actually buy existing real estate on their temporary visa, but they can only work 20 hours a week. So if they need finance, which some banks will actually provide for students, would be limited due to their working capacity under these temporary student visa arrangements. So borrowing capacity, they ain't going to do it. Are they buying cash? Well, I'll come to that in a second. And this chart from Alex Joyner shows that Kiwis are leading the way back in terms of short-term arrivals. The ABS notes that Chinese arrivals are at only 17% of the pre-lockdown levels. Overseas investors are buying less property than you think. Surely not. We're told that immigration is pushing property prices up. Surely not. Well, let's go through some data. China was the largest source of investment in Australian real estate, residential real estate, that is, with $1.6 billion invested in the 6 months to the end of December last year, 2022, according to official figures. Total foreign investment in Aussie real estate fell significantly in the first quarter of 2023. Chinese buyers remain the most significant, with $600 million of approved investment, even though it was down $1 billion from the previous period. Yet house prices fell close to 10%, while Chinese buying was higher than the first quarter of 2023. How could that be? I hope you guys are getting the sarcasm in my voice. Estimated figures conclude Chinese investment in Aussie residential real estate is expected to be $3.2 billion, up from $2.4 billion in 2021-2022. Eliza Owen, the head of research for Australia at CoreLogic, said foreign investment had actually fallen to a record low during the March 2021 quarter, when house prices were rising at a record pace of 8.5% in Sydney and 10% overall for all capital cities. How could that be? It's immigration that pushes house prices up. But if immigration and foreign investment fell to record levels, how come house prices rose at record levels during those times? None of this makes sense. Data complied by the NAB shows foreign investors made up only 3.7% of new home sales and 2.2% of established home sales back in the March quarter of 2021. This is total foreign buyers, which includes the UK, US, and Canada. Data shows foreign investment in real estate has been trending downwards since 2014, which you can see here. However, you can see that it bottomed in 2021 and it has risen, but nowhere near the pre-lockdown levels. So the reality is foreign buyers only account for 1% of total transactions in the Aussie property market and 4.6% of new development purchases, so the impact is limited. Survey from the University of Technology in Sydney found 82% of people believe foreign buyers, especially from China, were driving up Aussie house prices, making it harder for first home buyers, which, guess what, in turns creates FOMO. In fact, media reports of foreign buyers searching Australian property, say you see a lot of media reports saying, Aussie property, foreign buyers searching for Aussie property is up 65% compared to 2021, or, foreign investors purchasing a property is up 85% since 2021. Well, guess what? That creates FOMO with Aussie buyers. But the picture shows that although foreign real estate buying is up 85%, because it is, that's true, it's based on all-time record lows in 2021, but it's still below the pre-lockdown levels. So if you have a look at that, look, 2021, take about 7% right now. The latest data we got, take 13%. What's that? That's 85% increase, but it's still relatively low. But also, what people also miss is the sales side of foreign investor transactions. For example, from the 1st of July 2020 to the 30th of June 2021, a total of $4.2 billion worth of real estate transactions were bought by foreign investors, but the same period had $2.7 billion worth of real estate transactions being sold by foreign investors. So these are all gross numbers, not net numbers. Now, once again, I think I got this chart from my buddy Tarek, Auckland versus Sydney versus Toronto house prices. So this is when prices bottomed in the respective cities. In Auckland, this is 11 months after borders reopen. In Sydney, 10 months. And in Toronto, 9 months. After migration began increasing faster than pre-lockdown levels. How can that be? If we had massive immigration, how could house prices fall? It's such a mystery to me. Sarcasm, folks. So this is a great chart from Visual Capitalist, which shows the millionaire migrations. And you can see that, 13,500 millionaires emigrated from China. And Australia, well, we did get the most of them. 5,200. More than Singapore, more than the UAE, more than US, and more than Canada. Yet, Australia, these foreign buyers are mostly buying in the $2 million plus range. So once again, the impacts on real estate in the suburbs in most of our capital cities, maybe Sydney's slightly different, from foreign buyers is even less impacted than the overall numbers. Remember the numbers, the reality is foreign buyers only account for 1% of total transactions in the Aussie property market, and that is on purchases. We're not even taking into account the amount of sales from foreign buyers. I had to share this tweet because 99% of Australians think like Chris Grender. He says, under what circumstances would house values fall when Australia is happily importing hundreds of thousands new immigrants every year into the tightest rental markets in decades, and real estate owners know the government got their back? Also, interest rates likely near top. Now, Sam trades. Those of you who know Sam, he replies with this. Immigration isn't prime reason prices are going up, but it does raise rents, which is what I've argued. We've always had high immigration. Historically, houses never hit 10 to 15 times people's incomes. Mortgage debt has gone from $75 billion in 1990 to $2.2 trillion today. The trajectory is simply unsustainable. And then he talks about, whatever shock it could be. But what I want to highlight is he says Ireland had higher population growth and their bubble collapsed spectacularly. Real estate trading at 2 to 3% yields is always a bubble. Only thing keeping it alive is expanding credit. So what is he talking about regarding Ireland? Well, you can see here that immigration volumes tripled between 1995 and 2006 and peaked in 2007. However, after the bubble collapsed, and people woke up from their own FOMO, immigration kicked in and reversed the massive increase in immigration that happened prior to the bubble. But I won't talk too much about Ireland in this video because I'm saving Ireland for the last video. I'm saving the best for last. You won't want to miss that. So in terms of immigration having an impact on property prices themselves, are limited. Do I say they have no impact? No, I don't. They do have some impact in numerous ways. But the 99% of Australians think that, well, actually the data is here. There's the survey. 82%. 82% of people think that international investors are driving up house prices. It's just not true. That's just creating their own FOMO. But it is having an impact on the rental market because every net migrant that comes here needs a roof over their head. That creates more demand for the availability of the rental market. At the same time, another impact there's another factor impacting the rental market, and that is Airbnb, short-term properties. It's having an impact on the supply, and this is a great chart. I love it. Falling vacancy rates equals rising rents. There's plenty of research that backs this up. In fact, research by Professor Sigler and his colleagues at UQ, University of Queensland, show that between 2016 and 19, nearly 350,000 properties were listed at least once, with an average growth in listings of 2.43% a month. A study by the University of Sydney into the impact of short-term rentals in Tasmania found that in Hobart, 47% of Airbnb short-term rental properties had a long-term rental market history. It found the removal of just 195 houses from the private rental market can move the rental vacancy rate from 2% to a perilous 1%. Airbnb America, biggest US cities have 5.5 million homes sitting empty thanks to surge in families snapping up vacation properties. There are more than 600,000 vacant homes in New Orleans, Miami, and Tampa. Total short-term rental supply in the US reached 1.38 million in September. Limited housing inventory is contributing to a historically tight market. It's not just in Australia, folks. It's all around the world.
If just 1/4 of homes listed on Airbnb were made available for long-term rent, the number of properties available to tenants in WA would double. As the state grapples a housing crisis, is it time to bring in restrictions on short-stay accommodation? Victoria is introducing a 7.5% levy on bookings. Chantal Caruso is from the group Make Renting Fair. Thank you for joining us this afternoon.
Thanks for having me, Monica.
What's the current issue as you see it in Perth and WA?
Well, it's really obvious that renters are really hurting at the moment in WA, Monica. We've had, on every indicator, you could say it's really quite astonishing. We've got the lowest vacancy rates in Australia, almost next to zero. We've got record high rents. We're calling Perth the rent rise capital at the moment because we've just seen a 19% increase in the last year of rents being paid. So that's the equivalent of about $130 per week extra that a family are paying. And our services that are part of the Make Renting Fair Alliance, including Vinnie's and Anglicare, are seeing record numbers of people in extreme distress, people that ordinarily wouldn't use services, that are sleeping in their car or really at risk of homelessness right now.
Can changing the use of properties really make that much of a difference to the rental market though? I mean, some homes will be designed for short stays.
Oh, absolutely. Look, this is something that really surprised us because we're looking at all ways to improve the lives of Western Australia's 700,000 renters, and a really big part of that is improving supply. So we looked at the number of Airbnbs that are listed at the moment in Western Australia, and we were pretty shocked to find that there's about 10,000 whole properties listed at the moment in Western Australia, but just under 3,000 private rentals. So what that means is for every one rental, there's 3 Airbnbs. And in places like Stirling, for example, right here in Perth suburbs, there's more than 500 Airbnbs, but only around 100 rentals.
So what would you like to see brought in, Chantal? Is it restrictions? Is it taxes?
Yeah,
combination?
The great news is that the government actually have reforms on the table. The government went to the community in 2018 actually and consulted on reforms to the short stay market, and they're planning to bring in registration and then potentially a cap on the number of nights that short stay rentals can be listed. And so we welcome that wholeheartedly, and we're really excited and behind that, and we think that that would make a huge difference.
WA logged a record cash boost from tourism in the past year. Airbnbs will be part of that driver of our economy. Surely we should be supporting that.
Oh, absolutely. Look, we want to see our tourism regions thrive. But what we also didn't realise is those very regions where there's a really strong rate of tourism, like Margaret River, Kalbarri, Esperance, there's zero rentals but thousands of Airbnbs. And so, in a way, Airbnbs have cannibalised the local market. And if you're, for example, a tourism operator, it's really hard for you to expand your business if there's nowhere for your workers to rent. And we're also seeing people providing essential services, so nurses and doctors living in the regions that are just being squeezed out of the rental market. There's just literally nowhere for people to live.
Viewers are telling us what they'd like to see happen. We have quite a few comments here, if we can move through them as fast as we can.
Yeah, sure.
Terry Leanne says, offer an incentive to the owner of an Airbnb to make it a rental. Any suggestions there, Chantal?
We think, so other places have included an incentive. There's places in California, for example, and Sedona that are offering incentives, but we don't think we need to look at that right now. We think we should just get on with the reforms that the government have put on the table. It's a really easy win and a really modest reform, so we think we should start with that.
Jeanette Miller Korea writes, too many suburban homes being used for Airbnb contributing to the rental crisis. Do we need tighter zoning laws?
I think that will be the second part of the reform. So the great thing is when the government look at introducing a cap, so if we did get a 60-day cap, for example, that means you can still put your Airbnb, you can still list your Airbnb, but it would mean you'd need to apply to your local council for development approval. So in a sense, that would be zoning, and we really welcome that.
Talia Can reckons owners should be able to lease their home how they like. And with using it as Airbnb, it's not getting trashed like it would be with long-term renters.
Look, Talia, I agree. You should be allowed to use your home as you like. But if essentially you're running a hotel, which a lot of the Airbnb providers are, then you should be subject to commercial rates and better conditions and, comply with occupational health and safety. And you should have to apply to your local government in those areas.
Daniel Grube writes, look at the rules New York City are implementing. The rule changes will see over 40,000 Airbnb return back to long-term rentals. Now, other countries are cracking down on the platform. What could we learn from that?
Yeah, absolutely. That's a really good example in New York, actually. That happened quite recently, where essentially you're not allowed to let a whole house, you're not allowed to list a whole house in New York unless the owner is living there at the same time and has the people stay with them. I think that around the world we're seeing great moves because this is something that everyone is grappling with in every community almost around the world. So we're definitely looking to places like New York as a good example.
Look, it's a very popular topic, but we're going to have to leave it there for now. Chantal Caruso from Make Renting Fair, we really appreciate your time this afternoon.
Thanks so much.
On Airbnb, non-urban nights booked when comparing the second quarter of 2022 with the pre-lockdown second quarter of 2019 are up 60% in Australia, and also saw increases in New Zealand. The typical earnings for non-urban hosts on Airbnb was more in the second quarter of 2022 than during the same period in 2019. Australian hosts saw their earnings more than double. On Airbnb, non-urban nights booked for long-term stays, it's 28 days plus, in Australia have more than doubled when comparing the second quarter of 2022 with the pre-lockdown second quarter of 2019. 10 years ago, the Morning Peninsula, so those down in Victoria, very nice place of the world there actually, had a healthy rental vacancy rate of 3%, but it's now at 0.7%. Experts using figures from independent advocacy and data group Inside Airbnb say for every vacant rental, there are about 30 short stay rentals available on Airbnb. Of all Airbnb properties across Australia, 85% of those are entire homes. A 2019 report by America's Economic Policy Institute found that Airbnb's economic benefits were outweighed by the cost to renters. Then in 2020, global tourism ground to a halt. The lockdowns really showed there's a connection between the short-term rental market and rents all across Australia and indeed across the world, housing researcher Peter Phibbs said. In the Tasmanian capital of Hobart, residents have been in the midst of a housing crisis that predates the government lockdowns. Professor Phipps said the number of Airbnbs in the city equated to about 9% of the total rental market. During the pandemic, the balance has shifted. When housing stock went from short-term rental back to the long-term rental market in places like Hobart, we saw a sharp reduction in rents, he said. Professor Phipps estimated that during the lockdowns, rents in Hobart dropped by about 9%. Another study in Sydney by William Thackway and Christopher Pettit found rent prices in the most active Airbnb neighbourhoods dropped by up to 10%. Also, Senior Professor Pauline McGurk, who's a professor in the UOW School of Geography and Sustainable Communities and Director of the Australian Centre for Culture, Environment, Society, Space. That's a mouthful. She says short-term rentals are aggravating Australia's housing crisis, especially on the coast. There was a downturn in Airbnb because of government lockdowns. I don't use that other word. And that because it was government decision to lock down. So it wasn't due to a cough. And that stayed down in city centres, but it has bounced back in regional and tourist places especially. A good example is Byron Bay, where more than 30% of the housing stock is listed on Airbnb, she says. Rents there have gone up from about $550 a week in 2020 to $800 a week in 2022. So there's an immediate impact. And at the extreme, that means some people are pushed out of any housing into homelessness. It also changes the tenor of the places. The service change from servicing a residential domestic population to servicing tourists, she explained. Property owners are leaving the short-term accommodation market like Airbnb in favour of long-term renting as the rising cost of living dampens appetites for holidays on the Gold Coast, according to a property management firm. So are we starting to see things change? Is higher rates, higher holding costs and inflation, and now government introduced laws starting to have an impact? We shall see. Australian Bureau of Statistics census data suggests 1 in 10 properties on the Gold Coast are empty, while about 10% of the city's population are either homeless or living in unaffordable housing. There are more than 11,000 registered Airbnb properties on the Gold Coast, according to council data. The director of property management firm Manage My B&B, Linda Hildingson, said she had noted a decline in short-term rental bookings with each rate rise that we've had over the last 6 months. Easter was nearly 40% down on last year. She said of the 140 short-term letting properties, her business managers, about 50 have converted to long-term renting, so 50 out of the 140. Holiday Property Services, a cleaning company for short-term accommodation on the Gold Coast, has seen occupancy rates among its clients drop by between 60 and 75%. We were sitting at over 90% from August through to February this year, and that, I think, is just coming out of the government lockdown period. People needing to get out and book a holiday. We've gone from high highs to such low lows. Owners are removing their properties from the short-term rental platform and putting permanent renters in their properties to try and cover costs. And I am getting anecdotal evidence from our own clients that this change has occurred.
The Airbnb jackpot is drying up. Recently, we've seen a slew of articles about the Airbnb bust, worrying that the good times are over, that hosts will be eating cat food as they await that once-a-year booking.
2 years ago, I bought a house in Palm Springs and renovated it. I'm not going to sugarcoat it, you guys. We lost money. It's not looking good.
So in fact, it's more nuanced. Airbnb is playing out a concentrated version of the boom-bust cycle set off by a combination of lockdowns, followed by slash and burn interest rates at the Federal Reserve. The story starts back in March of 2020 when media went wall-to-wall on COVID in a coverage orgy that put the OJ trial to shame. Millions stayed home to save lives, but soon they decided New York is really boring if everything's closed. Some moved into their second homes, but most decamped to the suburbs where they could get a backyard, or to remote rentals where they could wait out the apocalypse. Back in 2020, I was driving through the New Hampshire mountains and saw scrawled signs shouting, "Lowlanders go home." This all drove Airbnb prices to the stratosphere. The second homes came off the Airbnb market, while the New Yorkers and the mass holes settled into long-term rentals, hogging those up. Airbnb hosts minted money. So what happened next is what markets always do. High prices brought new supply. With the Fed pimping 3% mortgages, millions of regular people looked at those eye-watering Airbnb profits, whipped out the pocket calculator, and decided they too would like a free house. So off to the mortgage man they went. This flooded the Airbnb market. In 1 year to March 2023, listings were up 26%. So that's a quarter of what they had built in the previous 13 years. Alas, the apocalypse ended. Pandemic restrictions gradually eased. Millions of renters could no longer hang out in Maui while supposedly working in Boston. That led to a glut with empty rentals and plunging prices. So in 32 of the top 50 rental markets, host revenue is now down 13% year on year. Across Airbnb, revenue is just over $1,000 per month, which is not bad, but it's not the $5,000 people were hoping for. And more important, it's not enough to cover a lot of the mortgages it took them to set it up. Meanwhile, hosts are having to raise their game, putting in amenities like high-end appliances and outdoor kitchens to get those Instagram moments, making sure the free shampoo, the soap, the towels are all arranged just so. Meanwhile, failing cities like San Francisco, New York, and Chicago are trying to outright ban Airbnb, who they blame for expensive rents because it's more fun than blaming themselves. So what is next? I don't think Airbnb as a concept is dead. It is a sound idea, especially for families, but the glut is going to take time to work out. Meanwhile, a looming recession could complicate things since recessions hit travel and leisure very hard. So just a few weeks ago, the Fed reported the $3 trillion in pandemic-era excess savings are about to run out, which could mean yet another exodus, this time of paying customers on Airbnb, leaving those hosts with mortgages to pay. The biggest takeaway is there's no free lunch. Airbnb, like everything else, takes a lot of work for the money, and like everything else, the Fed stands forever ready to screw it up. Okay, we'll be watching. See you next time.
And here from Jesse Felder, the Airbnb apocalypse is here. The company helped to stoke the housing crisis in places such as Bed-Stuy, benefited from the housing crisis, and now, in New York at least, it is getting crushed by it too. So with the changes in New York, the new laws in New York, what is happening to rents in New York? Well, there you have it. Looks like apartment rents are now falling. Interesting. So for those of you who don't know, perhaps, the laws in New York that got changed last month, check this 30-second clip out.
This morning, New York is going to begin enforcing a new law that regulates Airbnb rentals in New York. It happens today, and some say it could amount to an effective ban on short-term rentals. Robert Frank joins us now with the latest. What's going on here?
Well, Andrew, starting today, short-term rental hosts in New York, that's Airbnb or Booking.com, they're going to have to register with the city, and they have to comply with a new law that states you cannot rent out your entire apartment for less than 30 days, and hosts can only offer short-term rentals if they remain with their guests in the apartment. Hosts face fines of up to $5,000 per violation.
And by the way, the actual founder of Airbnb said that the whole original idea was that they could rent out a room while the people were still living in there. But the whole plan of Airbnb from the founders ended up turning into something completely different. But Rational Aussie says this is the beginning of the end for Airbnb, in my opinion. Airbnb is not the root cause of the housing crisis in any nation, but they certainly don't help. Governments everywhere will start to enact similar regulations in order to shift the blame from themselves to someone else. Totally agree. As you've seen, with Peter St. Onge, I totally agree. So I think here in Australia, we've seen it in Melbourne with Dan Andrews, and I think there's just going to be more and more regulation, blaming Airbnb, blaming short-term rentals, and it does have a role to play in the supply of long-term rentals. And obviously, immigration does have an impact on the rental market because everybody does need a roof under their head. So I expect I expect a lot of things to change. Also, I believe we're going to have tough economic times, recession, inflation, high interest rates are going to eat at people's disposable income. And I don't think people will be spending as much money on Airbnb as they have. So Amy Nixon tweets this, circling back to one of my favorite macro tweets of all time from Finance Lancelot. Scarcity is an illusion created by excess liquidity. We have enough houses, they're being misallocated as mini hotels. For many, this ends soon. So she shares this article from Zero Hedge. The Airbnb bubble popping will pop the housing bubble. Here's how we can tell if a speculative bubble is a bubble. Everyone says it isn't a bubble. So let's just check out this article. I'm just going to share the highlights of this article. Housing globally is in a bubble. So it's not just Australia, not just Canada, not just New Zealand, US, UK. This is a global phenomenon. A systemic driver of this bidding war for rental properties is the Airbnb model of monetizing individual properties to compete with hotels and resorts for lodging. This has led to an artificial scarcity of housing in popular tourist destinations. Many cities and locales are finally pushing back against the housing hoarding of the global wealthy, with taxing empty units and limiting and or licensing these type of properties. As I explained yesterday, the flood of post-pandemic price-insensitive revenge spending pushed tourist lodging rates to the moon. What's often forgotten about real estate is prices are set on the margin. 100% true. And actually, I'll read the next bit. The vital few 4% exert outsized influence over the 64% mass. And I'm going to talk more about this in the next video. And I'm going to share some data on the amount of delinquencies in the US, the peak delinquencies in the US during the GFC, the amount of defaults and foreclosures, and we're going to share some data what Australians are currently financially situated like right now. I'm going to show Ireland as well, and we're going to do some comparisons, folks. And yeah, I think a lot of people are going to be quite shocked. So 40 houses selling for around 450,000 will reset the valuation of 1,000 nearby homes from 800,000 to 450,000. The short-term, whatever that stands for, VR, I can't remember, bubble, it's just Airbnb, short-term rentals. Bubble was entirely an artifact of one, historically absurdly low mortgage rates, and two, post-pandemic price-insensitive revenge spending. Both were over. 100%. And when we move into a recession, unemployment rises. Oh, the pain. But we're going to have more pain than the US, because at least a lot of these people in the US were able to get, fix their rate for 3% for 30 years. All of our fixed rates are nearly all run off. We still got more over the next 3 to 6 months, but wow, we got basically the ARMs, the adjustable rate mortgages, because everyone had sub 2% fixed rates there for a few years. They're all rolling off to 6-7% now. Fun. The bottom 90% have tapped out their pandemic windfalls and their lines of credit. Yeah, and it wasn't just the Fed that created problems in the mortgage-backed security in the MBS market. Also, the RBA did the same thing with the TFF, the Term Funding Facility, the 3-year facility of $188 billion, which enabled the banks to offer sub 2% fixed rate mortgages for 2 to 3 years. However, now the RBA are sitting on massive losses while also paying out higher interest on those excess reserves. But I may touch on that in the next video. We'll see. The collapse of the short-term vacation rental bubble will topple a line of dominoes as corporate owners will awaken from their fantasies and realize they better sell now to lock in their gains before they vanish. Wealthy households who land bank properties for capital gains and places to park surplus capital will also awaken to the need to lock in gains by selling. And this is how bubbles collapse. The vital few 4% sell at whatever the market will bear, pushing prices down, and the 64% awaken to the rapidly narrow window for locking in bubble capital gains. This rush for the exit triggers a strike in buyers who realize there is no way to know how low valuations will fall, and so waiting for a bottom makes much more sense than playing catch the knife, i.e. buying as a bubble deflates, hoping you don't get burned by prices falling after overpaying. And someone shared this thread with me from Stephen Punwazi, and it says, let's talk about how Airbnb helped drive rents and home prices higher. Most people think 1 or 2 points can't influence a market. They've likely never worked at a hedge fund. It's not about the total market, but liquidity. Stock prices aren't based on every unit trading. They're based on the last trade. Every trade executed at or above the last trade reinforces a value. Let's say an Airbnb rents a unit for $3,000 a month, but long-term rents are $1,000 a month. Which would you rather? That's what an investor wants too. But what if renters really need that unit? They have to compete. Long-term rents need to rise until the Airbnb landlord considers a rent to be a reasonable incentive. Let's say that amount is halfway between the two, so $2,000. The long-term rent is higher, and guess what? Rent for the next unit in the area is based on that unit, aka comps. A stock doesn't trade all of its shares, but a handful of trades determine value. The last trade executed is assumed to be the market value as long as it can be absorbed. The marginal buyer, the outlier that executes a trade, is the one that matters. Short and long-term renters compete, driving prices higher. At the same time, long-term tenants are dealing with another competition. Tenants can either buy or rent. If we discount emotion, mortgage payments are compared to rents. Mortgage payments smaller than rent eliminate most of the incentive to rent. If Airbnbs help drive rents higher, the tenant will consider a larger mortgage payment within their leverage limits. Key point there, leverage. Larger payments mean bigger mortgages and higher prices. Over the last 30 years, the Bank of Canada found people didn't save money when rates fell. Sellers extracted the additional leverage in the form of a higher principal. People establish a payment comfort level, and that becomes their target. So yeah, Airbnbs impact rents and home prices. Prices are based on competition, substitution, and liquidity. A small factor can cause a cascading impact because only a small share of active market participants actually determine the price of an asset. All right, so empirical data tells me that immigration is not the driver of house prices. You'll see that again in the next part, where I give you more empirical data and historical evidence going back hundreds of years that will prove that. Immigration is creating a lot of demand for a very tight rental market, not just here, but all around the world. It's the same phenomenon all around the world. Australia isn't special. You know, it's not Chinese people coming in and buying all of our properties. I can tell you, we have a sub-aggregation finance business. So we provide home loans. We have a multi-billion-dollar loan book. We have a lot of brokers that are, let's say, ethnic Chinese and Indian descent. I can tell you guys that their numbers are down dramatically because these immigrants that are coming in, yep, some are buying cash in that big 2 million plus market, but the ones who have come here and they're working on certain visas, they need to borrow just like every other Aussie. And guess what? They're having the same borrowing capacity problems as everybody else. And so our brokers, we can see it. We can see the data. We talk to them face to face. They tell us. We can see it in the data. Their volumes have dropped because they can't get deals through. Banks are saying no, they can't borrow what they used to be able to. So, yeah, we're seeing this. And once again, the majority of our immigration is students. Yes, they can buy. On their temporary student visa, they can buy. Are they? Some are. Most aren't. But that's putting pressure on the rental market, but it's Australians, 82%, think that it is. And if they believe that, remember, value is subjective. Austrian economics, value is subjective. So if you believe that immigration's pushing house prices up and you're going to have that fear of missing out, you're going to go jump in. And in the next video, I'm going to show you exactly what is driving our housing prices right now. I will give you the exact answer, and I will show you on a chart. I will show you exactly what's pushing house prices. And it backs up my argument that it is people who think immigration is pushing house prices up, and therefore they're going out and getting loans because they've got FOMO, and they're buying houses, pushing up house prices. Airbnb obviously having an impact, but moving forward, are we seeing the beginning of the end of Airbnb? Not so sure. We're seeing some anecdotal evidence, as I said, but we'll have to wait and see. So, look, I'm not convinced. The data, everything I see, I am absolutely not convinced that immigration is having the big impact on house prices, because we had no immigration in the March 2021, or very little, in the March 2021 quarter, yet we saw record house price increases. We then saw massive increases in immigration in the second part of 2022, in the beginning of this year, and we saw house prices fall. We saw massive So, look, the empirical data does not back that up. However, subjective value does, and if 82% of Australians believe that to be the case, and then they create FOMO and they have, the media saying, well, foreigners are buying 85% more properties than they used to. Yeah, coming off a low base. It's still lower than pre-lockdown periods. Anyway, I'll leave it here for this video. Hopefully, you guys, as we're going along this journey, Austrian business cycle theory, in part 1, part 2, the bond market reprices all other assets. Part 3, the corporate bond market, the zombies and unemployment. And now in this video, you can see the impact that immigration, Airbnb, all of this stuff, and central banks, what they did in 2020 distorted the market. This is why I'm so adamant that the Austrian business cycle theory began to play out in 2020, and we're going to see the other side of it soon. But in the next video, I think is the best video. I'm actually going to do a part 6 video because there's so much more information that I just haven't been able to put in all these videos. And so I'll do part 6 as I'll just put bits and pieces of all this different information. So it won't be in a particular order. It won't focus on one particular area. It'll cover a little bit of the bond market, a little bit of the Austrian business cycle theory, a little bit of immigration, a little bit of Airbnb, and a little bit about what we are going to go through in the next video. So I'll leave it here for now. Hopefully you guys enjoyed this one. Whether you agree or disagree with me, I appreciate you following and watching this video series. I'll see you in the next video. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.